I'm going to be showing you the fastest way to grow a small trading account in 2025. The biggest problem that people have is lack of capital when trading, and I'm going to show you how you can grow your small account, even if you have as little as $100, and grow it up to $1,000 or more in a very short period of time, and without the risk of blowing the account, without over leveraging, and by using proper risk management. All right, so the fastest way to grow your small trading account in 2025. How exactly are we going to go about this? Now, you can start with as little as $100 and turn it to $1,000 in a very short period of time. Now, some of you might not believe this. By the end of this video, I'm going to prove that this is very possible and you can do this in a very short period of time. You just have to be patient. Now, a lot of people, when they try to turn a small account into a big account, is they tend to over leverage and gamble and do all manner of reckless trading in order to try to double the account to get to maybe like $1,000 or $5,000 or something meaningful or significant. But you can do that without being reckless. You can trade consistently, trade properly, trade like a professional using proper risk management, and still turn your $100 into $1,000 or more in a very short period of time. I'm going to be showing you how to do that in this video. Now, there are a couple of things that are going to need it. There are three main things that are going to need. The first thing that you will need is you need a proven trading strategy with a minimum of a 1 to 2 risk reward and a 50 to 60% win rate. Now, you can have more than a 1 to 2 risk reward. You can have more than a 50 or 60% win rate. If you have more than this, if you have statistics that are more than this, then that is even better, and you can achieve that achieve the results in a shorter period of time. But the minimum is you need to have a 1 to 2 risk reward and a 50 to 60% win rate, and this is what we're going to be working with. All right, so you need to have a proven trading strategy. Now, when I say a proven trading strategy, I mean a strategy that you have backtested by yourself, you have recorded the data, you have journaled it, you have backtested it and forward tested it, and you've come up with the win rate for the strategy. All right, how do you come up with the win rate of the strategy? You calculate the wins and the losses and divide it by how many trades you've taken, and you get the win rate. Now, the win rate should be at least over 50 to 100 trades. You need to get the win rate over 50 to 100 trades for that to be at least accurate. You can't just take 10 trades and get the win rate and say that that's a valid win rate. That's not a valid win rate. You need to have a large sample size or large amount of trades to get the win rates, right? So you need to have a 50 to 60% win rate with the 1 to 2 risk to reward. This is very attainable, very attainable on the market. You can get this with almost any good trading strategy out there. At least a 50% win rate. That's good enough, even if you don't get a 60% win rate. Now, you should have this data if you are serious about trading. So if you are actually serious about trading and taking this as a career or obtaining financial freedom, you need to have this. You need to take trading seriously and treat it like a business. Have your data, have all these things in check so that you can trade confidently. Now, you need to have your trading strategy, proven trading strategy. The second thing you need to do is you need to have a proper risk management plan and strategy, basically sticking to one consistent risk per trade. I'm going to be diving deeper into this as we go through this video. So nothing more, nothing less. Stick to one consistent risk per trade. And then the third thing you need is psychology. You need to work on your psychology and thinking long term. And I'm going to show you how to have the right mindset and have the right point of view when trading, to be trading consistently and like a professional. Now, the first one we're going to be going over is the proven trading strategy. Now, you can't do this without having a solid winning strategy. Like, you must have a winning strategy. Basically, it's called your edge. All right, your winning strategy is called your edge. You must have an edge in the market. Your edge is the advantage that your system gives you over the market to be profitable. Now, if you don't have a good trading strategy or you don't have a good edge, you can learn my own trading strategy. You can go on my YouTube channel. I have free videos on my page on my YouTube channel. You can check out my trading strategy if you want to learn that. If you're using any other trading strategy, if you have a good trading strategy, you don't need to do this. You don't need to learn my own. You can just stick to yours. I advise you to stick to yours. If you have a good one already, stick to yours. Get the win rates, get the risk reward that works with it, and then stick to it, and then you're good to go. But if you don't have that, you can go on my channel and check out my own trading strategy and then learn from me. Now, the risk management part. You have always been told to risk 1% per trade. This is a standard that you hear on social media and from all these online gurus and all that. Risk 1% per trade. But the thing is, we're going to be going against that. we're not going to be risking 1% per trade. We are actually going to be risking 5 to 10% per trade. Now, that might sound like a huge amount, like a large amount, but it basically depends on your account size. Now, why do I say that? The thing is, the people telling you to risk 1% per trade have thousands of dollars in their accounts, in their trading accounts. So if you have $10,000 and you're risking 1%, that's like you're risking $100 per trade to make $200. If you have $100,000 risking 1%, you're basically risking $1,000 to make $2,000. Like, or the risk reward, whatever risk reward you're using, right? But you're risking $1,000. That is fine. That is perfect. That is good. But if you have a small trading account, like a $100 account, you can't be risking, you can't be risking 1% per trade on that account. You're not going to go anywhere. If you want to make money, you're not going to go anywhere. Unless maybe the only exception to this is if you're practicing to get to master the skill, then yeah, you can stick with 1% per trade on a $100 account. But if your aim is, if you've already gotten the skill, you've gotten your edge and everything, and you want to be risking 1% on a $100 account, you're going to be there for for a very long time and you're not going to see any significant amount of money. And the crazy thing is actually going to affect your psychology because you're going to become impatient and then end up blowing the account because of that impatience and because you're not satisfied with the amount of money that you're seeing on the screen. So you can't be risking 1% on a small account. This is for people that have a significant amount of money in their accounts. At least even if it's $1,000 or $10,000 or $20,000. Risking 1% is very good, right? So you can't be risking 1% on a small account and expect to make any significant money. So the rule, or let's say the formula, or the way things work is if you have a small account, you risk high. If you have a big account, you risk less, right? Because if you have a small account, you don't really have room, you don't really have a lot of money to work with. So you can't be risking small. You have to risk high in order to make it worth your time, right? You have to make it worth your time. If you have a big account, you don't have to take on much risk because with a small risk, you can make a significant amount of money that you can be content with, right? So you don't really need to take on large risk. You can use small risk and then make a significant amount of money. With a small risk on a small account, on a big account, you're gonna make more than a small account. That's just basically it. Small risk on a big account, you make more than someone that has a small account. All right, so you don't really need to risk high. Now, risk management. This is the strategy that we're going to be using for the risk management to turn $100 to $1,000. This is the risk management. Now, pay close attention to this. There are two ways that we can go about this. There's the aggressive way and the conservative way. Right? There's the aggressive and the conservative. I'm going to be talking more about the aggressive. If you want to go the conservative route, you can go with that. Right? Just depends on your tolerance. So the aggressive route is basically just the risk that you're taking. All other things are the same, the risk you're taking and the time period that it takes. So on an aggressive route, you're going to be risking 10% per trade with the 1 to 2 or more risk to reward. You can use a 1 to 3 if you want, or 1 to 4, right? But what I found out is the higher your risk to reward, the lower your win rate you're going to have because trades are now not going to be hitting your take profits as frequently as it's going to be hitting on a 1 to 2. So to me, 1 to 2, 1 to 3, that's a sweet spot. All right, so you can go with the 1 to 2, you can go with the 1 to 3, but don't go anything less than a 1 to 2. That's the rule. So 10% risk per trade, 1 to 2 risk to reward, 50 to 60% win rate. It will take you a shorter time period than a conservative route where you're going to be risking 5% per trade, 1 to 2 risk to reward, 50 to 60% win rate. It's going to take you a longer time. Risking 10% per trade is going to take you half the time it's going to take you on a conservative route. So, but in this video, I'm going to be talking about the aggressive route. If you want to go conservative, just you can go with the conservative. All right, so how do we go about this? How exactly are we going to do this? If you go on ChatGPT or you do your own calculation by yourself, and just use ChatGPT to just make it straightforward and go straight to the point. If you're risking 10% per trade on a $100 account, how many trades do I need to lose consecutively to go from $100 to $10? Now, this is not going from $100 to zero. So you're not actually blowing your account. You're just going from $100 to $10. Basically, you're losing 90% of the accounts. It's going to take you 22 consecutive losing trades to do that, right? It will take you 22 consecutive losing trades for your account to go from $100 to $10 by risking 10% per trade. Now, think about this. You need to lose 22 times in a row without any single win inside. Remember, if you win, your win is times two of your loss because you're using a 1 to 2 risk reward. So basically, if you don't have any win inside, you have to lose 22 times in a row consecutively for you to go from $100 to $10. Now, even if you close your eyes and click buy and sell, there's a high probability that you're not going to lose 20 trades in a row, right? You're going to see one win inside there. Even if you gamble and just place buy and sell any time you want, you're going to see one winning trade inside there at least, all right? So this is you're not unless you have a if you have a very in fact I don't even know how you're gonna win do this to lose 22 trades in a row. I don't know how that's gonna happen. All right, so this is because we are risking by percentage and not by dollar value. All right, what do I mean by this? I'm gonna explain in the next video. In the next slide. We're risking by percentage and by not by dollar value. Right? The mistake that most people make when they are doing risk management is they are risking by dollar value instead of by percentage. That's one of the biggest mistakes that people make. They're risking by dollar value instead of by percentage. You need to be risking by percentage and not by dollar value. Right? That's how professionals do their risk management. Now, this is gonna be significant when I explain the table here. So now, basically, we're risking 10% per trade. All right, you can see we're risking 10% per trade here. If you have $100, risking 10% per trade. Let's say these trades we lost these three trades, right? These are three trades. We lost three trades, right? So you start with $100, you lose your first trade. The value that you're losing $10, right? Now your account is now $90. Now you're risking 10% on this $90. Now you're not risking, it's no longer, your account balance is no longer $100, it's now $90. Now you're risking 10% of this $90, right? You're risking 10% of this. And that is the dollar value is $9. So now it's no longer $10 you're risking $9. So you can see the dollar value that you're risking is less, but the risk percentage is the same, right? Because your account balance has reduced, right? So if your account balance drops to $80, you're still risking the same 10%, but now you're risking $8. Right. So basically, the more consecutive losses you take, the less dollars you lose. That's the math. If you're risking by dollar amount, you're risking by only dollar amount. If you just scratch this out and you're risking by only dollar amount, it's gonna take you just 10 trades, 10 losing trades, and you're gonna turn this $100 to zero. Right? Just 10 trades because $10 minus 10 minus 10 times like lose $10 10 times you have lost $100. Simple math, right? But if you're risking by percentage, you're not risking $10 per trade. You're risking based off of your account size. So if your account size drops, the dollar amount you're risking drops with it, right? So that way you have saved from this $10 to this $8. You have saved basically $2, two extra dollars. All right, you have saved $2. So as your account balance drops, you're gonna see that it's gonna take you 22 trades, losing trades in a row for your account to go from $100 to $10. All right, and it's because we're risking by percentages. So this stuff, this calculation here is correct. 22 trades, losing trades in a row because we're risking by percentage and not by dollar value. Now, what about if we are winning trades? So I just showed you when we are losing trades. What about if we are winning trades? Now, it's even better when you're winning trades because if you look at this table here, you can see we have a $100 account, risking 10%, right? 1 to 2 risk reward. You're gonna make $20 on your first trade, right? So let's say next trade you take is a winner, right? Now your account balance is already $120 because of this $20 profit that you made. So your account balance is now $120. Now you're risking 10% of 120. Remember, your account balance is no longer 100, it's now 120. So you're risking 10% of $120, and 10% of that is 24 $24. Sorry, 10% of that is is 12 dollars. And if you win your trade, which is times two of this, you're gonna get $24. Right now, you add this $24 to this $120, you're gonna have $144. Now you're risking 10% of that, 10% of this, right? Now, sorry, I made a mistake here. I made a mistake here. You're gonna make times two of of this. So this is gonna be $14 times two. Right? It's gonna be $14 times two. $14 times two, that is around That's around $28. All right. So this is gonna be $28 here. So so the first trade you took, you made $20. The second trade you took, you made $24. The third trade you took, you're making $28. So as you're winning trades, the more consecutive wins you take, the more dollars you're gonna make. Right? The more consecutive wins you take, the more dollars you make. And this is compounding. This is compounding 101. Welcome to the class. This is compounding. This is basically how compounding works, both for the winning side and the losing side. So, well, most people they only show you the winning side, but you also have to understand the losing side so that you can know what to expect when you enter a losing streak. Because every trading strategy has a losing streak and a winning streak. So you need to know what is possible and what is not possible, what is realistic and what is not realistic. All right, you have to have those realistic expectations. Now, of this is a table from the first trade to the 22 trades consecutively, losing 22 trades consecutively. So your account balance starts from $100. You lose your first trade, it turns to $90. You lose your next trade, $80 and 72. Then all the way down here, after you've taken 14 trades, 14 losses, you're going to be at $22. And then for you to go from there to here, it takes you another eight trades or nine trades, nine losing trades in a row for your account to go to like $10 or 9.85, right? So this is the table in a nutshell. So you need to make 100% per month to turn $100 to $1,000, right? Okay, I'm gonna show you how long it's gonna take, but you need to make 100% in a month, right? This is very, very attainable. It's very, very attainable. Some people might tell you that this is unrealistic. This is very, very realistic, right? You just need to have a 50 to 60% win rate and a 1 to 2 risk reward, right? And now it's just about how many trades you take, how many opportunities you get in that month, right? I'm gonna show you what this means. So I'm gonna prove to you that this is very realistic to take. So now a trader that takes 10 trades with a 1 to 2 risk reward makes 50% that month, right? Remember, you're risking 10% per trade. You're risking 10% per trade. That's why you're making 50%, right? So this is just like saying if you're risking 1% per trade, this is just like making 5%, right? This is like making 5%. So if you're risking 10% per trade, that 5% is no longer 5% now, it's now 50%. So when you're trading prop firms and you say you want to be making 5 to 10% per month, basically on the real account, if you're risking 10% per trade, you're making 50 to 100% per month, right? So it's just like the same thing. It's just like trading your real account like a prop firm, but without the rules and without the stuff on that prop firm space, right? So trader A takes 10 trades with the 1 to 2 risk reward and makes 50%. Trader B, using the same strategy, takes the same trades, but this time takes 20 trades instead of 10 trades, right? Takes 20 trades instead of 10 trades with the same risk reward, but makes 100%. Right. So trader A makes 50%, trader B makes 100%. Why? It's because of he took more trades than trader A. Trader B took more trades than trader A. That's why he makes 100% instead of 50%. Right. It's the same skill level. It's the same skill level, just taking more trades and taking advantage of more opportunities that you have on the charts, on the market. All right. So, so you can't tell me that this is not realistic. 20 trades in a month, this is a very good amount. Right. 20 trades in a month. How can you get 20 trades in a month? 20 divided by 4. All right. So basically, if you have five trades per week, you, 5 trades per week for 4 weeks, you have gotten 20 trades. That is very attainable. Right. Depending on your strategy, though. Depending on your strategy, if you have most people's strategy, you can get 20 trades in a month. At least, even if it's not 20 trades, you can get at least 15 trades in a month, right? Unless you're a swing trader, unless your trading strategy is like swing trading and you don't take much trades that. But if you're day trading or scalping is 20 trades is even too small for scalping. If you're day trading, about 20 trades, 15 to 20 trades is a good number to get per month, right? So you can make this is realistic, right? So with a 50% win rate, you need 20 trades in a month to make 100%. With a 60% win rate, if you can get a 60% win rate that month, you just need 7 trades to make 100%. Now you can make more than the 100%, right? So imagine if you have a 60% win rate that month, you take more than 7 trades. Maybe you take like 15 trades or maybe even take 20 trades. You're gonna make more than this, right? You're gonna make double of this actually, double of this. That's like 200%. Right, so this is very attainable. If you have a 50% win rate, you need 20 trades in a month to make 100%. And if you have a 60% win rate, you just need 7 trades to make 100%. Right. The reason for this is because when you have 20 trades with a 50% win rate, it means basically you have 10 wins and 10 losses. All right. If you have 10 wins and 10 losses, that's basically 50% win rate. At the end, you're gonna be there with 10 wins because your wins are times 2 of your losses, and then your wins minus your losses, you have 10 wins, right? Or 10, 100%. The reason why this gives you more is because the win rate is higher and the win rate accelerates compounding, so it makes the compounding faster. Now, if you ask ChatGPT or you do your calculation manually by yourself, if you make 200% per month on a $100 account, how long will it take to grow it to $1,000? Also adding the power of compounding. Now, it will take you 4 months to grow a $100 account to $1,000 with 100% monthly growth using compounding, right? If you can do this consistently, you can turn $100 to $1,000 in just 4 months, right? Just 4 months. January, February, March. January, February, March, April, $1,000. And the same thing, if you can turn $100 to $1,000, you can turn $1,000 to $10,000, right? Although that might take, depending on if you see that money as a huge amount of money, that might take a different psychological or different tolerance level, right? So here's an example of it manually. So month one, you turn $100 to $200, you made 100%. All right. Month two, you made 100% too. All right, you made 100% again. You turn $200 to $400. Month three, the third month, you turn $400 to $800. And the fourth month, you turn $800 to $1,600. All right. And this is even more than the $1,000. So imagine, let's just say you didn't get exactly 100% every month. At least you're going to be roughly around this 800 to 1,000. Even if you don't get 1,600, right? You can be around that 800 to 1,000, which is a very good place for some of you trading a small account. Those of you in Nigeria, you know how much $800 is. $600 alone, that's about 1 million naira. All right, so $800, that's a huge amount of money. That's like 1.3, 1.4 million naira, right? For those of you in Nigeria. So this is this is a good amount of money to make. At least if you get to $1,000, you can reduce your risk. You don't have to be risking 10% anymore. You can reduce your risk to like 5% or 3% and then just live off of that. All right, that's very attainable. And this is very, very possible. All right. You just need to lock in for the next, if you're gonna do this, you need to lock in for 4 months, focus, and this is where you can attain this. Now, in order to do this, remember I told you earlier, you need to have a good trading strategy. You need to have your data and know if your strategy can handle this, right? You need to know if your strategy can handle this, and you have to just apply the risk management, and you're good to go. Now, when it comes to trading psychology, I would have explained the trading psychology part, but I don't want this video to be too long, so I'm gonna just direct you to the best guide to learn trading psychology from, and this is where I learned from, right? So if I was to explain this, I'm just basically gonna be repeating what this guy said in his video, Mark Douglas, the late Mark Douglas, right? So this will give you these videos that I'm gonna show you. This will give you the right mindset to trade like a professional and stop making emotional decisions and blowing your accounts, right? Trading psychology is very, 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 very important. If you want to be successful in trading, you can have the best trading strategy in the world. You can apply proper risk management. But if your trading psychology is not there, it's going to be very difficult to be profitable. Some of you that are break-even traders, the reason why you're break-even traders is because of trading psychology. There's something you need to fix there that's going to make you profitable. Well, because you don't understand that, that's why you're break-even. And those of you losing trades too. Some of you losing trades is your trading strategy that's a problem. Some of you psychology, right? So these two videos, there's part one and part two. He's going to explain the right mindset that you need to have when trading Forex or whatever market you're trading, the right mindset that you need to have in order to be successful. And also, if you want to do this, if you want to turn $100 to $1,000 or more, or you want to be consistently trading profitably, you need to have the right mindset and have the right psychology in place, right? So the link to this video is going to be in the description. I'm going to put part one and part two in the description below. So if you guys, I recommend that you should go and watch this, at least dedicate the next 2 hours of your time to focus on this and learn this and take notes. All right, so make sure you like and subscribe. And if you have any questions, leave them in the comments and I'll answer them, or maybe do a video about it. And yeah, if you guys like this video, subscribe and I'll see you guys on the next one. All right, peace.